discussed. In fact, joining us now, our guest tonight, where we have Arnab Das, who's a global macro strategist, EMEA Invesco, and of course, there is Manoj Joshi as well, who's a distinguished fellow at ORF. Thank you very much, gentlemen, for joining us this evening on ET Now. Let me come to you first, Mr. Das. What should investors brace for tomorrow? We've seen the kind of moves that stock markets globally have been making. Of course, there's been an impact in India as well. But what are you bracing for tomorrow? In fact, in just a few hours from now, when Donald Trump announces these tariffs.
Well, thank you for having me. I wish I knew exactly what we should expect, but I think uncertainty is still the order of the day. As far as one can tell, there hasn't been a decision about whether to do these reciprocal tariffs, an across-the-board flat tariff on everyone, or sector tariffs. It probably won't come today, but haven't been ruled out for the future. So I would say, we get an important set of information this evening, tonight, India time, perhaps in 5 hours or so, from Trump himself. I would suggest that helps set the scene, but doesn't really tell us everything. It's probably more, sort of closer to the beginning of the story than the end of the story. And I think, any country, any company, any investor looking at this issue, also obviously needs to focus on, try to understand what the specifics are and how the specifics impact their own decisions or portfolio or whatever the case may be. But I think one also needs to take a step back and think about what it is that Trump himself and the Trump administration are trying to achieve. And I think that is a rebalancing of the US economy away from consumption and services towards investment and manufacturing in order to placate the base of voters that elected Trump now twice, and also because of the competition with China, right? Chinese industrial production by value is now twice as large as US industrial production by value. And so I think there's this kind of a fear or a concern, at least, that if it ever came to conflict, and indeed in order to deter conflict, the defense industrial base and more generally the manufacturing base in the United States has to be rebuilt. And that is why I think, some of this is aimed at China, some of it is aimed at emerging markets, but a lot of it is aimed, at quote unquote allies, at other high income countries where the prospects of reshoring are more likely to come through than from lower middle income countries or, upper middle income countries like China. And so I think that helps to explain all this focus on, expansionism in the Arctic, and also the focus on, or Greenland, Canada, and also the focus on Canada and Mexico and Europe, very different than the Biden friend-shoring and near-shoring, really much more about onshoring.
Right. Absolutely, Mr. Das, very well put, your opening comments on what the markets are tomorrow, and of course global investors could be bracing for. However, to the point about making American economy great again, well, there has been a fair bit of debate on how the imposition of these tariffs is not going to be enough to sort of get back the US economy or to make America great again, because these in turn will only increase inflation for US consumers. So it is going to be detrimental to the overall US economy as well. But let me get Mr. Joshi in. Mr. Joshi, what's the outlook then that geopolitical experts and of course ambassadors who are tracking foreign policy very closely with respect to the United States are bracing for?
Well, you have to take this when you ask for my response to the geopolitical consequences of this. So this has to be taken along with other steps that the Trump administration is taking within the United States, and also with regard to other countries, with its closest allies, like the NATO allies, Japan, South Korea, India, in a sense. And you take all these steps, you take the steps against migrants, you take everything. What you really see is a very sharp erosion of confidence on the US. Its closest allies, the Europeans, are reeling from the shocks that they are getting. Canada, its very neighbor, is very closely affected. Mexico. So I think that the tariff has to be taken together with that. And when you look at the tariffs straightforward, the first thing, as you yourself pointed out, what's going to happen is that the American consumer is going to pay, the American producer and the American consumer. But the Trump administration says that this is a short-term thing, and then
Absolutely.
eventually America will become very rich, and everyone will be very happy. Now that's the big. Everything is in the future, including
Abs-
the tariffs that he's going to announce at 1:30 Indian time.
Yes, absolutely, Mr. Joshi. And when you talk about Europe, you're given to understand there's some piece of news that's coming in that the European Union is preparing a package of potential emergency measures to support its economy in the event of Donald Trump actually announcing reciprocal tariffs on the European Union as well. They are saying that they are not retaliating immediately. So some relief, coming in there. The EU is working on a term sheet, talks with the United States, and in fact, India as well. The commentary, if you've seen come in from India's Commerce Ministry and of course the External Affairs Ministry, is that we want a mutually beneficial bilateral trade agreement. So we'll have to really see the kind of reciprocal tariffs that Donald Trump particularly announces for India. But Mr. Arnab, if you could also weigh in on which sectors do you anticipate, especially as far as the Indian economy is concerned, to be worst hit, and would you be expecting any relief given that Donald Trump is known to flip-flop? He did that with Canada, he did that with Mexico as well.
Yeah, look, I think the flip-flopping and the uncertainty that is being generated here, I think it's extremely damaging to the brand of the United States. I think it's extremely damaging to the economy, at least in the short term, maybe longer than that. And I think it will all this disruption that's already occurred even before these swinging tariffs have been announced, let alone implemented, probably going to lead to a cyclical growth slowdown, right? Confidence has taken a big hit for consumers, confidence in businesses, not just as we've just discussed, confidence among the allies, but confidence at home within the U.S. And it seems that the Trump administration is willing to pay this price in order to achieve whatever its objectives may be. So I think, inflation is a risk. I would suggest, the bigger issue is a meaningful slowdown, cyclically short term, and this is a big structural change that we're talking about. So I think when you try to bring that to the case of India, or other countries, I think the right thing to do is to acknowledge that there is a bit of an imbalance in the international trading system, that other countries historically, not anymore, but historically have had higher average tariffs than the US. They continue to have a wider range in many cases, including India, wider dispersion in the tariffs, and the peak tariff is higher than in the US. And then, of course, there are lots of non-tariff barriers, regulatory measures and others. And so I think the best outcome here would be if other countries, sort of did, I think, what India is trying to do, which is to, try to reconcile domestic constraints within India with what appear to be President Trump and his administration's objectives in doing this. Now, I'm not sure that's going to work, but I think it's going to be better if it is done by many countries. It's going to be better than retaliating and having a tit-for-tat escalation and a kind of traditional trade war. I'm sure there'll be more of that. There's already been some, but I would suggest that the right approach here is to try to achieve whatever can be achieved to keep trade as open as possible, even given what I take to be this Trump administration effort to onshore and reshore a significant amount of manufacturing. And I think that will work for some countries. I think it'll work to some degree for India. I think for Europe, and in particular for Canada and Mexico, it will work because the disruption, short-term disruption, could be extreme for the US economy, as well as for Canada and Mexico. I think, the US has more cards, as the president likes to put it, than other countries, because the US is still the world's biggest importer, continuous deficit country by some distance, $1.2 trillion a year in trade deficit. 800 billion or so,
Right.
900 billion in current account deficit. And so the world as a whole does need the US. And of course, the US needs the world. So there is a deal to be done by this, so-called transactional president, but perhaps more on his terms than on everybody else's terms, which is how he thinks the system has been set up until now, quote unquote, ripping off the US. Right. So I think that India and other countries are taking the right approach. I hope it'll work, and that it will make things less extreme than the rhetoric and the uncertainty have suggested. And I think it will.
That's exactly, Mr. Dasgupta, that countries across the world are hoping before these announcements are really made. But Mr. Joshi, let me ask you, you've seen India's consistent stance over these tariffs, and India's position has been clear. How do you think India to respond? How do you think India is going to respond tomorrow? Is India going to follow perhaps what the European Union is doing, which is to ensure that we are not going to retaliate immediately? Do you expect India to follow that as well? What do you think is going to be India's stance?
Well, I think the Indian stance has already been very clear. Indian stance has been accommodative. We have already lowered tariffs in certain areas. The issue is that we just don't have the size of trade with the US, which can actually hurt the US. Meaning, if we put up our tariffs, the US is not going to be affected if we don't lower our tariffs beyond a point. So there is about 45 billion deficit that the US faces with regard to India. Out of this, I think the government is planning to fill $15 to $20 billion by importing oil and natural gas. So there's about 20 billion left. And the pressure really is on agricultural tariffs. And that is where I think the government of India will draw a line, because it's simply not possible for India to give concessions in that area. But there will be other areas. And I think the government of India has basically signaled that it's willing to make a deal. It's not going to retaliate. For example, Canada and Europe have very clearly said that we're going to retaliate. See, but they have the size of their trade is such that it will hurt America, as much as it will hurt them. But in our case, there is a lot of imbalance. And I don't think we can. And we also, secondly, our great dependence on the US is really geopolitical, not so much economic. See, yes, we want US investment. We
Absolutely.
want
US but Mr. Joshi, the United States is also dependent on India, especially as far as the matter of the South China Sea is concerned. Of course, the way the Donald Trump administration has dealt with China, with Canada, with Mexico is very, very different from how the administration is dealing with India. Donald Trump has stated of his fondness for India, for the Indian Prime Minister as well. But a final question, Mr. Das, before we close this discussion. How do you see India, the India-US relationship really pan out? Because there is a China angle as well. Like I was stating, that US is looking at India to balance China, especially as far as the South China Sea is concerned. And we've also seen brands come to India. They want to de-risk their supply chains and want to increase their investments in India. So how do you really see this pan out for India? And secondly, how do you see investors position themselves?
Well, I think you're absolutely right that the Trump administration and the U.S. generally is approaching India somewhat differently than traditionally closer allies, and I would say there's something similar going on with other trading partners and geopolitical allies in Asia more generally. I think the India-U.S. relationship can be a very constructive and very balanced one. I think, I suspect that one of the things, I guess very clear now, that one of the things that the Trump administration objects to very publicly and very vocally, viscerally, in public and private, is all this so-called European free riding on the U.S., not meeting their shares of defense commitments and burden sharing over many decades. And yet having a closed market so that the U.S. cannot generate jobs, profits, and taxes from selling to Europe, but must instead, in effect, as the vice president has argued, subsidize Europe. And so I think it doesn't see that in India, right? It sees the opposite. It sees a partner who is willing to bear a significant share of the burden, wants to have an economy that is relatively closed, but still somewhat integrated into the world, not completely self-sufficient, but but motivated by domestically driven growth, and that is going to do all it can to take care of itself. So I think that is a pretty good setup for this, and I think the relationship will inevitably get closer because, as you say, because of China. And I think China, really the U.S.-China rivalry, as well as the domestic challenges of the U.S., inequality, fentanyl, and so forth. This explains pretty much everything that's going on with the Trump administration. I don't think it's that hard to figure out, right? It's really what you see is what you get. A lot of it is out there on the sleeve. So I think that's actually a fairly good environment in a certain sense for India. And I think in any case, what India needs to do is liberalize domestic industry in order to become more of a manufacturing player, perhaps directed at the domestic market. And when it comes to exports to the US and other countries, concentrate on a natural comparative advantage, or maybe it's not so natural, but it's a fact, right? That India is much more competitive and has a better comparative advantage in professional services of various kinds, but it probably needs to have a lot more manufacturing industry, both for geopolitical reasons in order to defend itself and in order to generate good high quality jobs for a country that is young, that has relatively high youth unemployment, right? And for that, there needs to be a lot of domestic deregulation and liberalization, in my opinion, in order to offset the fact that you don't have the avenues for the East Asian model for manufacturing growth that in the case of India, right? Because the world economy is not opening up and globalizing very deeply anymore. If anything, of course, as we're discussing, right, the reverse is taking place.
Yes.
So services exports, domestic-oriented manufacturing.
Right. All right, Mr. Das, thank you very much for your concluding remarks. Just a few hours to go before those reciprocal tariffs are announced. We'll have to see the impact that India faces. But India has also been trying to de-risk its supply chain by having FTAs or free trade agreements with several countries. One is going on with the United Kingdom. There was an EFTA agreement as well, and another one recently signed with New Zealand. We'll have to see, once again, like I said, the impact of Donald Trump's policies. India will need to balance its economic interests with its geopolitical ambitions. On that note, thank you very much, gentlemen, for joining us this evening on ET Now and sharing your perspectives on this big story that we're tracking right here on ET Now.